Okay, hey folks, it's been a while since I recorded a video, so I figured I'd put one out. And I want to do kind of a quick market recap from October of 2023 to the present day. So it's July 17th of 2024. And you might be wondering why October of 2023. So let's go ahead and jump into it, shall we? Okay, so in October, if you've been following the market or maybe haven't really followed the market, October was the bottom of a correction that we had in 2023. And what's interesting to note about corrections or pullbacks is that they're often followed by a significant rise in the market. As a matter of fact, according to Schwab, and that's where I got a lot of my research, you will see during a correction, the following month after the correction, the average return for the month after that correction is about 8%. And we saw close to that. I mean, we've seen some incredible strength and movement in the market for 2024. So I think it's important to look at that starting point because of where the market might be headed up to the end of 2024. Now, one of the things I do want to cover is the difference between a correction and a pullback. And the reason why this is important is just because of the nature of what they are, okay? So oftentimes you're going to hear people in the financial industry or folks like me will use this term kind of interchangeably. We'll call it a correction or a pullback. And there actually really is a difference. Okay, so for starters, pullbacks are typically a decline from the most recent high of 5 to 10%. Now, these pullbacks are generally short in nature, and then the prices will resume their upward trend almost immediately. Typically, I've seen pullbacks last 1 to 2 months, okay? A correction, however, is a decline from the most recent high of more than 10% up to 20%. And these are a lot more volatile and they last much longer. And on average, a correction is going to last between 4 and 6 months, okay? And then you always have during a correction, not typically during a pullback, but during a correction, you will typically have bear market worries. So should you be worried that a correction is going to turn into a bear market? So remember, a bear market is the decline from the most recent high of 20% or more. Now, they used to have a caveat in there, 20% or more over a sustained period, but they kind of changed that wording in 2020 because we had a 34% drop and it lasted 33 days. So but typically a bear market is going to be 20% or more over a sustained period. Volatility is going to rise significantly and there's going to be a lot of fear, which is causing this sell-off. But here's the thing, bear markets, they don't follow corrections as often as you might think they do. Generally, people will be worried during a correction that we're headed towards a bear market. But the reality is, according to the research done by Charles Schwab Center for Financial Research, using data provided by Morningstar, since 1974, only 5 market corrections have become bear markets, okay? Now, we just had a market correction in October, okay? Another thing on bear markets is let's talk about time frames, because bear markets are such a volatile event, we often forget that they don't last that long, okay? And they don't last as long as a bull market. And so when we look at bear market trends, they tend to be a lot shorter than a bull market. As a matter of fact, the average duration of a bull market is 2,069 days. Put another way, that's 68 months. Put another way, that's over 5 years, right? So 5 to 6 years is the average bull market, while the average bear market is 446 days, or 15 months, or a year and a half. Okay, so that year and a half can seem like a very long time because it's a painful year and a half. But that is from start to finish, okay? That's the average. Is that always the case? No, remember, averages are just that. They're averages. So always keep that in mind. Okay, so I want to kind of go into the next thing that tends to happen, and I've seen this, I've been seeing this, especially in this market. People get so fearful of the market during a correction that there's a lot of people that probably aren't doing or haven't done much up until this point, and now they're seeing, oh my God, the market is at massive highs. So what if I miss the boat? Well, here's the reality. Opportunities within the market happen all the time. So everyone misses the boat. I've been trading in the market since 2013. That's when I first started learning how to trade options. And I can tell you, I miss opportunities all the time. Most of the key issues that come into play here is money. People don't have money, so that's why they miss that opportunity. At least that's the truth for me. So saving money is always the right thing to do. Okay, you always want to save money. Saving money will afford you the opportunity to catch the next wave. The other important factor is to never try and catch the boat, or worse, try and make up for lost returns. Now, I've seen this play out on the negative side more times than I've ever seen it play out on the positive side. Yes, there are times when you can get lucky, but more times than not, it doesn't work in your favor. And I can tell you, when you try to catch up, oftentimes you'll over leverage your account. You'll risk way more money than you can afford to lose. And when something goes wrong, you're in deep trouble. And this is why you often hear about so many options traders going broke, or why they put so many restrictions on trading options. The reality is options aren't really that risky, any more than a vehicle in the hands of an inexperienced driver, right? So the problem though with options is everyone's allured to their fast returns and explosive returns, and so oftentimes they'll try and use options to try and catch up for what they might have missed in, let's say, their buy and hold strategies. So in many cases, folks are risking way too much money. You'll see this. I see this a lot where I've taken courses where they don't have really any risk parameters, and you'll see that you're risking like 25-30% on one trade that's and options have a time frame, right? And the trade's going to expire in 60 days. And it's like, man, the reality is you're going to have losing trades. So you don't know if the first trade you place is the losing trade or the last trade. But in either case, you can't risk that much money. This is why you have to find a system, and one that will promote risk management principles first. Okay. So no matter what investing course you take, if they don't harp on risk management, or worse yet, they don't even mention it, in my opinion, you should stay clear of that. And find a course where they really focus on risk management, and then start small, work your way up. Okay. So the thing I want to cover is what we teach. So if you want more information, I'll cover that at the end, but you can always head over to our website. You can see it down there on the bottom of my screen there, theoptionswealthacademy.com. And we also have a free course you can sign up for, but I did want to quickly show you what we teach our students. Okay, so we really, our two strategies are built around three pillars. Okay, so we always say income, growth, and market crash protection. So let me cover those three pillars. So because I've always been taught to focus on risk first, that's where I like to start. So we have a market crash protection. How do we protect against a market crash? Well, we have a unique formula for our risk parameters. And I'll be honest with you, most people, when they first look at this, think that we are way too conservative, because we are risking a fraction of our account. As a matter of fact, in many cases, as much as 90% of your money is in cash while trading our strategies. Next, we teach our growth strategy, okay? And this is called 3x growth. This is by far the easiest strategy to comprehend, but I gotta tell you, it's the most strategy to put in practice. But when done correctly, this strategy has the ability to grow your account significantly. The basis of the strategy is to 3x the original risk you're placing on your trades. So for example, if you placed a trade that risked $500, our strategy is designed to show you how to 3x that $500 and hit a profit target of $1,500. The best part, and oftentimes the most difficult, and this is what makes it the most difficult, is that it's a passive in nature strategy. It's almost a set it and forget it type of strategy. So you aren't constantly worrying about the market. And that's what actually makes it a little difficult. People want to be in the market, especially when you first start trading options. And that kind of leads me into our next strategy. This is our income strategy. And I can tell you, oftentimes students will skip through the 3x growth strategy, jump right into this one. And I can understand that, because that's exactly what I did, and cash flow is one of my favorite strategies. I love the cash flow strategy. This strategy, however, is a bit more difficult and complicated, because now we're delving into the world of selling options. But unlike a lot of programs I've seen and actually joined, we maintain strict risk parameters that avoid massive losses. Remember, market crash protection. We're teaching you this first. So the beauty of this strategy is that you can create consistent monthly income. So I'll give you a quick sample. In the model account for this year, I started with $8,000, and my average income that I've generated thus far has been about $239 per month. Okay, so every month I've generated about $239 of that $8,000, right? Off of that $8,000. And a majority of that $8,000 isn't at risk. So while that doesn't turn any heads, just to be clear, if you divide 239 into 8,000, that's a 3% average monthly profit. And this is booked profit. I've been averaging, not every month I make 3%, but on average, if you take all my returns I've gotten this year thus far, booked profit, I've averaged a 3% monthly profit. Now, in all transparency, not all my trades are going to be winning trades. I have had all winning trades this year, so I am expecting the market's going to pull back at some point, or I'm going to get caught in one of those pullbacks and corrections. And depending on which it is, I can see a losing month, or sometimes I can see 3 losing months out of a given year. So if we were to base the worst case scenario, having 3 out of 12 losing months based on what I've done so far and how my strategy is working, that puts my income at about 2.24% per month. And so just to kind of put that into annual figures, that's 26.8% annually. Okay, so it's hard to fathom and kind of understand income from a percentage. So let me go a little bit further and show you what this can look like over the next 5 years. So let's take my starting balance of $8,000 a month. I'm going to contribute $300 every month. You remember I said in the beginning, you got to save your money. So I'm going to contribute $300 every month. And if I generate an average 26.8% return, the balance on that account in 5 years can be $56,821. Now, given that same 2.24% monthly return on that 56K account, that's a monthly income of $1,136 just from this strategy. Now, folks, I know people that don't get that much money from Social Security each month after working for nearly 40 years and waiting till the age of 70 to collect. So this is why I say start small. You start small, take baby steps, and before you know it, in 5 years, you can have a 50K account averaging $1,000 per month. And the best part is our strategy really only takes 10 minutes to manage. 10 minutes a month to manage it, and you can generate 2% a month. So you plug in the numbers on what your account size is, and you can see what it does. Okay, so if you want more information, head over to the Options Wealth Academy. Again, www.optionswealthacademy.com. Please like, comment, and subscribe to our YouTube channel. I am working on trying to put out more and more videos. If you like and subscribe, hit that notification bell. You'll get notified every time we put out a new video. Head over to the Options Wealth Academy. We have a free course that teaches you the basics of options. That's a course that's being built in real time. So you'll see information there, and it's just growing over time. And then if you're interested, take one of our courses. You start with Options Wealth Academy 1.0. That'll teach you exactly what I just covered here. So that's it, you guys. You take care, and we will see you in the next video. Bye-bye.